This moving average trick can transform your trading. Hi, it's Charlie giving you today's video. So I'm recording this in advance because I'm out of the country at the moment. Let's have a look here. So what's this all about? Well, it's a simple concept. What you need is a simple, simple concept with a simple moving average. Most of my moving averages are simple, not exponential. Lots of traders like exponentials, but there's something with a simple moving average which gives you a heads up to what may be going on that you're not going to see with an exponential. So let's go and have a look here. So take any given moving average, but usually, again, I'm going to use an example here today of just a 50 period moving average. Commonly used, yes, some people like using a 55 because it's a fib number, whatever. That's fine as well. It doesn't really matter. That's a nice, they're all medium term. I don't care if you use a 47 period moving average. Or you could, even with a 21 moving average. Again, fib number, doesn't matter if it's a 20, of course. So something like a mid-range moving average, such as a 20 or 21 or a 50 or that type of number. Right. So what we're looking at is the angle of the moving average. So moving average angle. And this is just one trick. Now, I've been using moving averages for, all of the time, pretty much, right from when I first started trading. The only indicator I ever used was at the beginning was moving averages. A long time ago, there wasn't as many indicators as there are today. So, angle of the moving average gives us a heads up. So, let's say that the market price is having a night. Obviously, if the moving average is moving up, price must be generally in a nice upwards trend. Then what happens is price comes the other side of the moving average. But, and this is the point of having a simple, it won't work with an exponential, that a simple moving average won't just immediately roll over as price comes down. And that's exactly what I want. It will roll over, but it's the times that it doesn't that gives us a heads up. So this simple moving average trick is all about when the moving average is facing, in this instance, up, obviously the opposite for downward sloping, and usually we're looking at a given angle of, I guess, 30-degree angle and above, and vice versa. So what we're looking at is price coming down the other side of the moving average into, and this is an important thing, there has to be some sort of support or whatever. So here we've got like a prior high from back here. So it could be something like that or whatever other level that you're seeing on the chart. Then it's highly likely, and I would give it a 70% probability plus, that price will bounce back to the moving average. Okay, if the moving average is still facing up, price comes the other side of it into some form of it could be a minor support, then there's very good odds that price will come back for a retest of the moving average because the moving average is still facing upwards. It's almost like just giving us a little secret window to say, this little rundown here, it's unlikely to keep going without at least a bounce first of all. And more often than not, it'll bounce back to the moving average, even if it's going to then roll over. Okay, so that's the pattern overall that we're looking for, whether it's in an upward sloping direction like this, or if we're using it in the opposite form. Now, the thing with this is you don't have to trade it. You don't have to trade this pattern, but it gives you a heads up that if you're just monitoring a market and you see this happening, then it may just be useful information for you. It may not be that, oh, I've got to buy that and I've got to look for a trade entry to get long. It may just be giving you a heads up that, oh, okay, maybe you're already in a long. maybe you're already long in the position and the market's having a bit of a pullback, that it might make you think, oh yeah, okay, well, the moving average is still facing up. It's likely that price will at least come back up to that, and then maybe it ends up coming all the way through and off we go again. Whatever the information is, it gives you a heads up to what price may be doing. Even if you're not going to specifically trade it, it's quite nice to know this sort of stuff. So let's now bring up the chart and see if we can find some examples I've got up here. Bear in mind, like I said, I'm recording this last weekend, and so hence why the data's, I don't know what this euro dollar will have been doing by the time this video gets out to you. So anyway, the daily chart, yes, it's quite clear. The daily 50 here, my black moving average, is facing upwards. Now, price didn't go the other side of it. So what I need to find is some examples of where that's actually happened. So let's see if I can find some. Okay, so yeah, right back here. Just taking this as a very minutiae example, price, let's actually put it into replay. Actually, that might be useful. So we can get a sense, zoom it in slightly for you. Okay, so price came down to this low here. And we can see the 50 still facing up above. So it's likely that at the very least, you can see that, oh, there we go. So price bounced back up to the 50. It's a very small example, but you get the idea. Right, let's see if we can find, that was just on an 8-hour chart. All right, okay. I don't think there's anything here on the weekly at the moment, but if I come over to the S&P, wow, look at that. So when we had the high volatility drop into the April lows of this year of 25, look what the 50 was doing, still sloping upwards. Was it a good enough angle? I think so. I think that angle was still fine. It was such a good angle. Now, whether you would have wanted to have tried to buy it down there is another question. But it doesn't matter. The point is, I'm just highlighting some examples here of a 50 moving average going one way, price coming below it. Well, more often than not, price will come back up, at the very least come back to test or at least get close to it. Right. Let's come over to another market. Let's go to the pound dollar here. Is there any examples on this? Maybe not. Just having a look. The moving averages are flat there. So here's a bit of one here. So price has gone the other side of the 50, still facing even down, and price then comes back down to test it. Again, a lot of this is not necessarily always going to be tradable, but because that's a very subtle. Oh, okay, it's a little double top, so to speak. And again, whether you trade it or not is another matter. It's just information to say, oh, okay, the moving average is still facing down. It's likely we come back down to it. And more often than not, I see this all of the time, whether you're looking at an hourly chart. If I come to an hourly time frame here, is there anything going on the pound there? No, but I think actually this week we had something like, there we go, on the euro. So at this point down here, price, it was the other side of the 50. We got the bounce back up. The 50 was facing upwards there. Even down to here, the 50 had flattened off a bit, but it was still facing up, but it flattened a bit. So was it a strong enough angle? Probably not. But again, I'm just trying to find some examples here whilst I'm live doing this recording. But certainly there's another minutiae one there. But you very often do see it, whether using a 50 or a 20 or 21, that type of moving average, and price goes the other side. If the angle is there, more often than not, price will retrace back to said moving average. It's just, you don't always have to trade the information, but it's a great trick, or hack, should I say, so that you can see where price or what price may still have to do before moving on in its next overall direction. once you get your eye in for this sort of pattern, you'll see it a lot. I see it a lot. I'm not trading every time that it happens, but it's still useful information overall to my trading. So I see it on all sorts of time frames. Whether I'm coming out, down to a hourly time frame, you could use it on a 5 minute chart intraday even, or if I'm coming out to like a monthly chart here, like back here. Funny enough, I was shorting that in 2018 for that, not for that, just that reason. But I remember trading this with our members at that time because price had come into a load of what is now resistance. Price support became resistance. There were other moving averages like 200 period moving averages at that stage as well, and look at the angle of the 50 at that stage. So there were other reasons as well, there were divergences, but that was all part of the analysis. So that was a genuine trade that I took back there in 2018 all the way down. So we see this sort of stuff all of the time. When the moving average is angled to the downside and yet price has come up into resistance, watch out. You might say, well, what about now, right now, Charlie? No, that's relatively flat. That moving average is flattening out at the moment, so not seeing anything in that right now. If I come out to a quarterly chart, just to finish off, on the quarterly, so again, principle is all about when price extends through the moving average. So let's say the euro was to extend through the moving average, come up into a resistance zone, and if that quarterly 50 was still facing down, then again, it's likely that price will work its way back down towards the moving average. In the meantime, so from where it peaks, it could be that moving average starts to flatten off and curve up. So yeah, then price will just come back down to it as it's curving. But this sort of stuff, it's really useful information for your trading. Hopefully that's been a nice little hack for you today. I'll see you soon.